Hi guys, this is Sheri Jolly with Dental Support Essentials, and I am here today with Jamie Bliss of Zimmerman, Boltz Company. And Zimmerman Boltz is a accounting firm tailored specifically for dentists. They're located in New Albany, Ohio. And I've worked with Jamie and his clients for a couple of years. And Jamie, I just wanted Jamie to come on here and kind of give the message to the dentists this year about what you should be paying attention to in your accounting. As we approach the end of the year, 2020 is going to be a little different than it was in 2019. So let's just dive right into it. Jamie,
Sure.
what are the different things for 2020 that the doctors have to consider and discuss with their accountants that they didn't have to discuss in 2019?
Yeah, I think one of the big things that stands out to us here at Zimmerman Boltz Company and talking to our clients as we're going through kind of our year-end meetings is there was a lot of relief that came through from the government, and it came through in several different forms. I think everyone's fairly familiar with the PPP loan, the Paycheck Protection Program. So there was a forgivable loan, and then there were EIDL loans, economic disaster income loans, and those are non-forgivable loans, but they had some excellent terms with them. There was Health and Human Services gave some relief in the form of grants that came through, and as well at the state level, at least here in Ohio. The state just recently offered up, a potential $10,000 grant to a lot of healthcare businesses in general. So I guess the question or the thing to kind of make sure when you meet with your accountant, is that they're aware of all the different funds that you did receive, because there are some that will be taxable, some that won't be taxable. And then there's a little bit of, I guess, controversy or debate between the IRS and the Congress in terms of how the PPP loan expenses are going to be treated, because they're back and forth between whether they're a tax deduction or not a tax deduction. So we're talking to our clients in terms of how best case, worst case. If they end up being tax deductions, here's what you're looking at. If they're not tax deductions, here's your other alternative in terms of a fourth quarter estimate.
Yeah, and I have to tell you, as a business owner myself, an employer, and also because I work with doctors. I mean, when all the doctors were shut down, the billing kind of shut down too. But
Right.
I have to tell you, I had so many conversations with my clients about the unknown, and I had conversations with my accountant, like, do I apply? How do I get forgive? Can I guarantee it will be forgiven? And there's still no real answers. So we're still planning like plan A and plan B, sort of.
True. And I think, the reality is for most, because they extended the time frame that you can use the funds and the time that you have for forgiveness, I guess, you'd be hard pressed not to get that loan forgiven. So that, I think a matter of working with your bank, there is a process, and whether, depending on the amount of your loan, how simplified or how complex maybe that application is, but you should be able to get that loan forgiven. I think that, like I said before, the question is, who's going to win the arm wrestling match between the IRS and Congress? There are plans in place in a future. I guess I believe it's the HEROES Act. They're working on hammering out. There's a clause in there that says, hey IRS, the deductions are going to be tax exempt. They're going to be able to be a tax deduction for those. It's just, we don't know the timing of when that's going to be approved or when, that'll take effect, I guess.
Yes. And when you talked about the EIDL loan, there was the EIDL loan and the EIDL grant. And do we need to report those separately? Like if we got the EIDL grant, now, did anybody get the EIDL loan and the grant and the PPP?
So It was possible.
Okay.
So what typically would happen is if you applied for the EIDL loan, you would receive an initial grant that was money that they were trying to get out as soon as possible. To avoid double dipping between, I guess, the EIDL grant program and the PPP program, the idea was, all right, if you received both of those, then the portion of your PPP loan that would be EIDL grant would not be forgiven. So they're going to say, hey, you already received, for instance, $10,000 in an EIDL grant. We're going to reduce your forgiveness because you've already received that relief in another form. So if your PPP loan was, 75,000, they're only going to forgive 65,000, and you're going to end up having to pay back that 10.
Oh, okay.
So.
All right.
Yeah,
Now, see, that was something I didn't know. I didn't know that. I didn't know that forgiveness could be reduced, because I do know that some banks are not processing forgiveness applications right now. Is that are you seeing that too? Because I know my bank isn't processing applications yet.
Some are, some aren't. And I think a lot, it's somewhat dependent upon the wait and see. They're trying to see kind of how things play out. And also there are rumblings that, forgiveness, they already did one wave of it. So if you have a $50,000 or less PPP loan, it was a fairly simple application. There are also rumors out there that it could get even simpler down the road for others. And I think maybe that's what some folks are kind of wait and see type thing. I think it's also just trying to figure out what the IRS and what the Congress is going to do.
Okay. So just to recap, when your client or when the dentist meets with their accountant, they should come to the meeting with what kind of relief funds they've received in what manner, and list them individually. What was the grant? What wasn't? And should they bring bank statements? I mean, they probably already, with a lot of them, they have bank statements already, the accountant, but they should definitely show you what bank account it was in and how it was qualified, correct?
Sure. Yeah. I think it's a matter of separating out between what is truly, collections from operations, and then what's coming in the forms of government relief, due to the pandemic and the shutdowns and so on and so forth.
What can doctors do with the rising expenses? So one of the things that we're running into is, number one, I say this all the time, and sometimes I think people ignore me, but in dentistry, almost all your employees are women. When you advertise for a job, you get one male candidate for every 25 female candidates. And I noticed that daycare issues are just accelerated this year. Like babysitters have, there's rules on how many kids they can watch at a time. Daycares, there's rules how many. So not everybody's getting the childcare they need. We have complications with childcare. We have complications with spacing our patients out, not seeing as many patients in a day. And now PPP, protection equipment, has tripled in price. So what can these doctors, should they be itemizing these things out? What can they expect as far as tax returns for all of these problems, or plan for how should they handle these new situations being thrown at them?
Well, I guess it's a challenge for everyone out there. I mean, the expenses are on the rise. And so I think where we try to help our clients and help them manage, it's more so, not necessarily managing on the, obviously we all want to be tax efficient, and we want to minimize the amount of tax we're paying. The reality is, we're all working with the same tax code. So there isn't one accounting firm out there, versus another necessarily that has the silver bullet and how to make sure I don't pay tax. Where we come into play with our clients is coming alongside of them and helping them realize and recognize that, as a small business owner, cash is the lifeblood of your business. So if you don't have cash, it limits your flexibility. It limits, decision making. And so we try to help them conserve their cash as best we can, and help them and do different, services in terms of modeling and budgeting and forecasting and what ifs. What if I buy this milling unit? What if I hire this, FDA? And helping them be able to see the impacts of those decisions, to help them continue to, have that nest egg or that safety net of cash. So when they're in a situation unforeseen like 2020, that they don't find themselves just, destitute and not being able to make any decisions because they don't have any money in the bank.
Yes. So at this point, I just want to jump in and I want to say to all the dental offices out there, when you are starting your business or running your business, it's very important to get an accountant who knows about dentistry. I have seen that. Now I work in the billing, the accounts receivable part. I get calls in January, usually for just a couple clients for Jamie. He'll say, go figure out what's going on with their accounts receivable. But what I do see, and I've seen often, is when you aren't using an accountant who understands dentistry, who understands that your bank account needs to match your software, who understands all of these things, you lose out a little bit. I see that a lot of times in unposted payments, like when I'm researching unpaid claims and I find out that a bunch of payments have been received 2 months ago, and how do I post them so that it shows accurate income, those types of things, particularly per quarter, per year, those types of things, because depending on when you post it, it affects their taxes. I was just in an office 2 weeks ago, and the office manager found some mistakes from the previous office manager, and she was going back and redoing things from a closed tax year and changing the income amount. And I was just like, stop, stop doing that. I said, you've already paid taxes on that year. And I said, you need to talk to your accountant before you do that. Of course, that made the doctor's heart beat a little bit. We walked it down. I showed them how to properly report that. But do you see those types of things that happen a lot?
Well, I think definitely. I mean, there's definitely a value to having someone who I guess gets it. We when we talk to our clients all the time, it's a trust relationship. I can't look in someone's mouth and diagnose the dentistry, and they can't necessarily look at a set of financial statements and diagnose their business. So it's a mutual respect, and not everyone has the same tool set, I guess, in what they do. And I think also, honestly, Sheri, that's why you do get those phone calls from us, is, we will meet with our clients and sit down with them and look at accounts receivable and compare it to maybe a previous period or a previous month. And, the over 90 days has gone through the roof. And so, because we don't necessarily possess that dental software expertise and the claims and the adjustments, we turn to DSE as a expert partner in helping navigate our clients navigate through cash flow. I mean, it's a cash flow issue.
Absolutely. And I will tell you that it has gotten harder in this year. Stuff has slowed down. What I have found is a lot of insurance companies have their workforce working from home, and I have seen things be less efficient. There isn't a supervisor to ask now. You have to call, your calls take longer. It's very, very, like, the most annoying job in the dental front desk area is the data entry part. It is also what lives or dies your cash flow. Your cash flow lives and dies on data entry. When people sign up for my training courses, which we offer online now for anybody who has a front desk person who's either just new to the front desk or new to dentistry, we have online courses here at DSE on our website. And we spend a lot of time talking about pre-work and data entry and what needs to happen before the patient walks in the office. And Jamie sees that on the other end when the claim's not paid and the patient didn't pay, and it costs you twice as much to then go pay someone else to call that patient, call that insurance company, and 2 or 3 months later you get paid. and then you have to do a write-off, or you don't. I mean, a lot of patients, when they walk out the door with completed dentistry, there is no consequence to pay you now. You get to the bottom of the list. So how many doctors have you seen, like a percentage wise, that are losing out on timely collections? I mean, probably not your clients, they're in good shape, but but do you see that as a whole as a big problem?
Well, I think it's something that we stress to our clients. They receive each month we provide a set of financial statements, and in those financial statements, there's a management statement that tracks their accounts receivable collection ratio. So we look at things with them on a monthly, where they can see it on a monthly basis, and then we'll meet with them, quarterly, and show them, all right, here's your net production. So this is what you should collect. Here's how much you've collected. And so we want to see that in like a 98%. We want to make sure that you're collecting what you've done. And then we'll also track their accounts receivable ratio, which says, how long does it take me from the time that the time I produced it to the time it hits my bank account. And I think today's, with the aid of technology and electronic claims and EFTs and ACHs, that should be what we would call one, which translates into a month, 30 days.
Yeah, I see that too. There are two companies that in my mind that I see on every accounts receivable report that just pay you in 6 weeks. There's just they just pay in 6 weeks. So whenever I see an accounts receivable report and it only has 5 or 6 pages and 2 of them are those companies, I'm like, okay, you just live in an area where the employers use that. But otherwise, most, particularly hygiene claims, those should be paid in under a month. So your hygiene should just be, so those are some healthy parameters that doctors should be looking at. Now, do you do all dentists? Have you seen that different specialties have different, like pay cycles and things like that? I know that orthodontists, their pay cycles are a little bit different.
Sure. And I guess for the most part, across the board, you want to see like the pays coming through, but you're right, the orthodontists do have a different business, and you got to understand contracts receivable versus accounts receivable in terms of timing and collection. I think we also have some practices that do some in-house financing, so that can kind of skew your accounts receivable a little bit, and it's a matter of understanding that. And then with some of the in-house financing, but also maybe even with some of these membership plans that they take on, and skew those numbers a bit.
Membership plans, I'll tell you what, membership plans, I like them for patients who are over 65. They're way more effective for your patients than any Medicare supplement plan I've ever seen. I feel like those plans just are so hard to deal with, and they pay very little. It's not worth your patient's time if you have a good membership plan. But I also have seen that the way you account for your membership plan, when you put it in your system as an insurance company, it creates claims. And then when it creates a claim, the person at the front desk doesn't collect. And so you have to not only create the membership plan, but create an effective plan of execution for that membership plan, or you end up with a lot of unpaid dentistry.
Right.
What is your feeling on in-house financing? Because my opinion, I'll just say it before you say it. I say, don't be the bank. I say that dentists aren't bankers, and they shouldn't be bankers, and they should employ a third-party financing company for that. But there are a lot of doctors, particularly in the ortho, who do finance. Basically, you are actually lending money to your patient when you let them pay you monthly payments over 24 months. So what are your feelings on that?
The risk you run, I think you'd probably agree here too. We tell our clients, all the time, the longer it takes you to collect that money, the harder it is, the less likely you're going to collect it. So if you're not getting it, over the counter at time of service, through insurance, or, use the resources available, where sure, it might cost you a little bit up front, but you don't have to be the bank. Someone else is collecting that money over time. And for you, the time value of money and having it in your pocket now is probably worth every penny.
Yeah, absolutely. Well, Jamie, thank you so much for being on here. Are there any other key tips before we go that dentists should prepare for their January meeting with their accountant? What do you like to see when you have that January end of the year meeting?
Well, I think one other quick thing to kind of maybe knock the dust off is your financial plan, maybe with your financial advisor. Look at maybe what your financial plan's calling for in terms of your retirement, how much you want to have deferred, how much you want to put away in terms, from your 401ks to your IRAs, SEP plans, whatever. Just a lot of that has to happen or be determined before December 31st. So you want to make sure you've had a conversation, with those professionals as well, because those are tax deferred, deductions and can save you some money now, but and down the road. And so if you miss that deadline and you don't get it, get that deferment in place prior to, the end of the year, it can maybe cost you a few tax dollars.
Well, nobody wants to pay extra tax dollars, that's for sure. Well, thank you so much, Jamie, for being on here. I'm going to put Jamie's contact information in the comments of this video, but he is with Zimmerman and Boltz Accounting Company. It is a dental accounting company. It's located in Ohio. They're great. They're a great company. So I highly recommend new dentists, old dentists, any dentist who needs a little bit more help with their account, especially if you're growing, grow the right way. I've seen that so many times where they grow so fast that they can't handle their own growth. Right. So, all right. Well, thank you guys, and you'll see us again next week.
All right. Thank you, Sheri.
You're welcome.